Have you ever bought a loaf of bread and noticed it never seems to go back down in price? You remember it used to be $1, but now it's $2, $3 or more. Every time you check, it's still climbing. And you wonder, why? Why do prices never fall back the way they went up? It feels unfair, doesn't it? But here's the part nobody talks about. This isn't some random trick. It's a system designed in a very particular way, and understanding it might just save your wallet, or at least make you feel less powerless. Let's break it down step by step and see why the things we buy every single day almost never get cheaper once they climb. And don't worry, I'll keep it simple, like explaining it to a 5-year-old. Prices are like tiny signals in the economy. They tell businesses how much something is worth, how much it costs to make, and how much people are willing to pay. But prices don't float in a vacuum. They interact with wages, interest rates, loans, and even human psychology. Take a loaf of bread. Ingredients go up, the baker needs to pay employees more, rent rises. Suddenly, the price of that loaf goes up. And then you might think, okay, next week ingredients are cheaper, bread should drop back to $1. But it rarely does. Something about the way money and markets are structured makes prices go up easily. But coming down, that's a whole other story. You might think, well, maybe demand is still high. Sure, sometimes that's part of it. But often it's more than supply and demand. There's a deeper, almost invisible mechanism at work. The ratchet effect. Economists call this the ratchet effect. Imagine a ratchet wrench. It clicks forward in one direction but won't move back. That's exactly how prices behave in most markets. They go up, and even if costs drop, they rarely fall. Why? Because businesses, governments, and banks all have incentives to keep prices moving upward, or at least steady. They don't want sudden deflation where prices drop sharply. Deflation might sound good at first, cheaper everything, right? But in reality, it's dangerous. When prices fall, people stop spending. They wait, hoping for even cheaper prices. Loans suddenly feel heavier. Mortgages, credit cards, student debt, all these fixed payments become harder to manage. A mild drop in prices can ripple through the entire economy like a shockwave. So the system is designed to prevent that. It's stable, it's predictable, but the downside, prices rarely move backward. Think about the last time you noticed a price drop. Maybe gas went down a few cents or a phone went on sale. It's temporary, and within weeks, prices reset at a higher level than before. This pattern repeats across groceries, housing, electronics, and even services. Even your paycheck, ironically, doesn't always keep up with price growth. You might get a small raise, but inflation often outpaces it. So even as prices go up, your money buys less. It's a slow squeeze, a subtle pressure, but it's very real. Main events. Now let's dig deeper. Businesses, banks, and governments all play a role. When costs rise, businesses face a choice: absorb the cost and shrink profits, or pass it to customers. Almost always they pass it on. Profits are lifelines. Investors expect returns, employees expect wages. Cutting prices isn't simple. It can lead to layoffs, lower investment, or even bankruptcy. Central banks add another layer. Their goal is stability. They don't want wild swings, so they adjust interest rates to control spending. When the economy grows too fast and prices rise quickly, they increase rates to slow things down. When growth slows, they inject money to keep spending steady. But here's the key. Their goal isn't to make bread cheaper. Their goal is stability, predictable inflation, usually around 2% a year. This ensures the economy doesn't collapse, but it also ensures that prices keep ratcheting upward, almost never downward. Real-life example. Consider real-life examples, housing prices, for instance. In cities across the US, Canada, the UK, and Germany, home prices keep climbing. They may plateau temporarily, but rarely drop. People still pay more this year than last. Why? Because property is expensive to maintain. Mortgages influence monthly payments, and demand almost always outpaces supply. Groceries tell a similar story. Milk, eggs, flour, costs fluctuate, but your grocery bill rarely drops. Even gas prices, volatile as they seem, tend to reset at higher levels after each spike. It's as if prices have a memory. Once they go up, they never forget. Even small things like coffee, haircuts, or internet bills follow this trend. Temporary discounts happen, but they're usually marketing tricks. Eventually, prices rise again, quietly, without much notice. Mind tension, reset. Here's a mind bender. Even if the cost of raw materials falls, even if energy or rent goes down, businesses rarely reduce prices proportionally. Why? Because lowering prices sends a signal that something is wrong. It says we're struggling. Investors notice, employees worry, competitors react. Suddenly, the small benefit of a cheaper product is outweighed by risk. Psychology of prices. Humans add another layer of complexity. We remember old prices. We feel nostalgia for cheaper times. But businesses don't operate on memory. They operate on forward-looking costs. That's why old prices feel like a standard that never returns. And the way we think about money amplifies the ratchet effect. When prices rise slowly, we barely notice. A $1 increase here, $2 there. Over time, it adds up. But when prices drop suddenly, our brains see it as a warning. So businesses avoid it. Insights. Gasoline, groceries, rent, it's all the same pattern. Temporary drops happen, but they reset at higher levels, and the cycle repeats. Prices climb, plateau, and climb again. Even tech products follow the ratchet effect. Smartphones, laptops, gaming consoles. Launch prices are high, early discounts happen, but within a year, average prices settle at a higher level than expected. Turning point. What can you do? Understanding the system gives us power. You don't have to be a banker or an economist, you just need to see the patterns. First, realize that waiting for prices to drop is rarely a winning strategy. Your groceries, rent, or gas aren't going to magically return to the old, cheap prices. The economy rarely works that way. Instead, focus on increasing your earning power faster than inflation. Investments are one way. Stocks, real estate, side businesses, or even starting a small online venture can grow your income faster than prices increase. When prices rise, if your income rises faster, you gain real buying power. Second, budgeting isn't just about cutting spending, it's about timing. Recognize which expenses are likely to climb. Lock in long-term contracts where possible. Avoid waiting for a price miracle that probably won't happen. Third, mindset matters. Stop comparing current prices to memory. Adjust expectations. This isn't pessimism, it's realism. When you see the pattern, you're no longer a passive consumer. You make strategic choices instead of hoping the market bends in your favor. Insight you might haven't missed. Here's a secret most people miss. The system isn't out to cheat you. It's just designed for stability. Profits, predictable inflation, and cautious spending keep the economy from collapsing. But it also ensures that prices ratchet upward, almost never downward. Long-term strategy. You can also protect yourself by thinking long-term. Buy assets that gain value, not liabilities that lose it. Focus on skills, investments, and knowledge that compound over time. The faster your earning potential grows, the less these small but relentless price increases matter. Even small side hustles or passive income streams help. When the price of gas, rent, or groceries rises, your extra income cushions the blow. Instead of worrying about rising prices, you use the system to your advantage. Final takeaway. In the end, the lesson is simple. Prices are like a ratchet, clicking upward, rarely back. Waiting for them to fall keeps you stuck, but increasing your earning power, making smart investments, and understanding the economy gives you control. It may feel like prices are against you, but once you see the pattern, you stop being a victim. You start playing the game strategically. You start thinking like someone who understands the ratchet. Next time bread costs $3 instead of $1, don't panic. Don't wait. Plan, invest, grow. That's how you win, even in a world where prices never go back down. And if you want more insights on the hidden mechanics of money, subscribe and hit the bell. Understanding these patterns isn't just knowledge, it's financial freedom. Thanks for watching our video. We highly appreciate if you share this video with your friends. Like and subscribe our channel for more videos.